Hi guys, we will be discussing a new concept in GST. When a new law or economic reforms or policy or an act is introduced in the country, it is certainly may not be in favor of all the stakeholders. Some of the segments or stakeholders, they may feel that the policy which is introduced by the government is favorable to them. Some of them may feel that they were left out, or some of them may not be happy with the policy or the reforms or the laws which are brought out by the government. But there is one mechanism under GST that benefits the society, customers, manufacturers, individuals or people in the supply chain, that could be the retailer, wholesalers and distributors, and the government, thereby creating win-win situation for all the stakeholders involved in it. The mechanism is called as input tax credit. So today in this video we'll be discussing about some of the introductory concept of input tax credit. To be specific, we will be seeing how input tax credit works using an example, and we'll be discussing what exactly input tax credit is. So this is the plan for this video. Let us move towards our example. Welcome friends to the circle of knowledge called Avi's Academy. You are at the right place if you are learning commerce, management and economics at undergraduation and post-graduation level, and if you are one of those who have thirst for knowledge. Let us assume there is a person called Mr. Blue. So he wants to have a party at his home for celebrating his birthday. So he invites his 3 friends. Then all of a sudden they decide that they would like to have ice cream in the evening. So what Mr. Blue does is he calls Ideal Ice Cream Parlor, which is a famous ice cream brand in the coastal Karnataka. So the Ideal Ice Cream Parlor guy, the seller, so they receives the order from Mr. Blue, the buyer, and they supply Ideal ice cream to Mr. Blue's home address. So immediately what Mr. Blue does is he makes payment to Ideal ice cream worth rupees 112. Out of this 112, 100 rupees you could say it belongs to the Ideal ice cream, which is the price of the ice cream, and the 12 rupees is the tax which is imposed on the ice cream at 12%. Okay, so that 12% should go to the government as GST. Let's see next what Ideal Ice Cream Parlor does with 12 rupees. Our seller, that is Ideal Ice Cream Parlor, they have 112 rupees which is collected from Mr. Blue. So after collecting the money, the Ideal Ice Cream Parlor can keep 100 rupees with them, and they have to pay rupees 12 to the government as their GST tax liability. Ideals pays rupees 12 to the government immediately. Now if we think from the point of view of Ideals, so they are making ice creams. To make ice creams, they need certain inputs, right? The major constituent of their input will be milk and milk related product. They may use some ingredients, some flavors, etc., but major component will be milk and milk related products. So now we all know that Ideal Ice Cream Parlor doesn't have their own dairy where they can milk out from the cow, right? So therefore what we can assume is, only for example sake, what we will do is we will assume that Ideal Ice Cream Parlor obtains the required inputs, which is milk and milk products, from another famous dairy product or dairy brand in coastal Karnataka, which is Nandini. Okay, so what Ideal Ice Cream Parlor does is they need inputs, and the input which they need for the ice cream may cost around 105 rupees. They pay 105 rupees to Nandini, and in return Nandini will supply milk and milk related products which is required to the to manufacture the ice cream to the ideal ice cream. So after that, what Nandini will do, out of 100 rupees, 5 rupees which is collected as tax from ideal ice cream has to be deposited to the government. So in this case, if we see, the government will collect 17 rupees as tax from ideal ice cream. Why I am telling ideal ice cream is because first the 12 rupees component they collect from the customer, and then ideal pays it to the government. So paid by ideal from the customer 12 rupees, and again on the inputs which they purchase, that is ideal purchases from Nandini, they have to pay 5 rupees as tax to Nandini, and after that Nandini will pay to the government. So totally you could say 17 rupees which is paid by ideal ice cream to the government as tax. If this prevails in all the sectors, what happens is every manufacturer has to pay tax on their inputs as well as their outputs. It won't be congenial from development of industry and thereby it is not beneficial or congenial from the point of view of industry, because manufacturers has to pay tax on their inputs as well as their output, which will ultimately increases their cost of production, and it is not good from the angle of the economy, because manufacturers will not pay the tax liability by themselves. They will pass on the tax liability to their customer. Their customer could be the distributor or the wholesaler. Wholesaler will pass on their liability to their customer, who could be the retailer, and retailer finally transfers their liability to their customer, which is the final consumer, which is the society or public, or you can say us. So finally the entire tax burden of inputs and outputs will be paid by the final customers to the government. So therefore this is not a good mechanism of collecting tax on input as well as output, unless there is some change in the regime. The GST tax regime addresses all these issues with a mechanism called input tax credit. Let us see how this mechanism works. Under GST, if somebody wants to register, they can get a GST registration number by registering under GST portal. So once they register, every registered person has to pay tax to the government. In our example, ideals, to make ice cream, they rely on Nandini for inputs, and in the example case, ideals pay rupees 105 to Nandini. Nandini, out of rupees 105, can keep 100 with them and must pay rupees 5 to the government. So they will pay rupees 5 to the government. Whenever a person or a supplier registers under GST, the government will open 3 electronic ledger automatically under their registration, or you can say under their name. Those 3 electronic ledgers are electronic cash ledger, electronic credit ledger, and electronic liability ledger. Electronic cash ledger will show the balance or the amount which is paid by the supplier to government as tax, whereas electronic credit ledger will show the balance of input tax credit, that is the tax which is paid by the supplier for their input, whereas electronic liability ledger will show their actual tax liability. So whenever Nandini pays rupees 5 to the government, it will be reflected in their electronic electronic cash ledger, because Nandini is also a registered person under GST, and they are paying rupees 5 which is collected from ideal to the government. So that 5 rupees will be shown in their electronic cash ledger as the payment made by Nandini. So they have fulfilled their tax liability by paying 5 rupees to the government. The same amount of rupees 5 will be reflected in electronic credit ledger of Ideal. So you can say imaginarily, you can say government will show same amount of rupees 5 which is in electronic cash ledger of Nandini in electronic credit ledger of Ideals as input tax credit, because this amount of rupees 5 paid by Ideal on their input, so that will be shown as input tax credit in electronic credit ledger. So Ideals, what has done in our example is they supplied 112 worth rupees ice cream to Mr. Blue. So out of 112, 12 rupees was the tax liability, which is GST, which is paid by Mr. Blue to Ideals along with 100 rupees. Now what Ideals can do under input tax credit mechanism is their liability is 12 rupees and their input tax credit balance in electronic credit ledger is rupees 5. So when they are making payment to the government as their actual tax liability, they can offset their electronic input tax credit from their actual tax liability of rupees 12, and then they can finally pay rupees 7 to the government. So in this entire set of transaction, the government collects rupees 5 from Nandini and rupees 7 from Ideals, which is same as the rupees 12 collected from the customer Mr. Blue by Ideals. So the burden on the customer is also 12, the burden on the people involved, that is Ideal and Nandini, collectively also 12. So hence win-win situation for everybody. This mechanism of offsetting tax paid on inputs from the tax which is supposed to be paid on output is called as input tax credit. Therefore, we can say input tax credit is the tax that a business pays on the inward supply and that it can be used to reduce its tax liability when it makes an outward supply. So input tax credit andre ಒಂದು ಟ್ಯಾಕ್ಸ್ that a business pays on inward supply. ನಾವೀಗ ನಮ್ಮ ಎಕ್ಸಾಂಪಲ್ ಕನ್ಸಿಡರ್ ಮಾಡಿದರೆ Ideals was a business and they have paid tax on their inward supply. Inward supply ಅಂದರೆ their ಪರ್ಚೇಸ್ ಏನು ಮಾಡಿದ್ರು, ಅವರು ನಂದಿನಿಯಿಂದ ಮಿಲ್ಕ್ ಮತ್ತು ಮಿಲ್ಕ್ ಪ್ರಾಡಕ್ಟ್ಸನ್ನು ಪರ್ಚೇಸ್ ಮಾಡಿದರು. ಸೊ ಆನ್ ದ್ಯಾಟ್ ದೇ ಪೇಯ್ಡ್ ಅ ಟ್ಯಾಕ್ಸ್ ವರ್ತ್ rupees 5, ರೈಟ್? ಸೊ ದ್ಯಾಟ್ ಈಸ್ ಅವೈಲೇಬಲ್ ಆ್ಯಸ್ ಇನ್ಪುಟ್ ಟ್ಯಾಕ್ಸ್ ಕ್ರೆಡಿಟ್. ಆ್ಯಂಡ್ ಅದನ್ನು ಏನು ಮಾಡ್ಬೋದು, ಆ್ಯಂಡ್ ದ್ಯಾಟ್ ಇಟ್ ಕ್ಯಾನ್ ಬಿ ಯೂಸ್ಡ್ ಟು ರೆಡ್ಯೂಸ್ ಇಟ್ಸ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿ. ಅವರ ಆ್ಯಕ್ಚುಯಲ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿ ಇದ್ದದ್ದು ಏನು ಕಸ್ಟಮರಿಂದ ಕಲೆಕ್ಟ್ ಮಾಡಿದರು, ಮಿಸ್ಟರ್ ಬ್ಲೂ ಇಂದ ಕಲೆಕ್ಟ್ ಮಾಡಿದರು, ವಿಚ್ ಈಸ್ rupees 12, ರೈಟ್? 12 rupeesಅನ್ನು ಕಲೆಕ್ಟ್ ಮಾಡಿದ್ದು, ಅದು ಅವರ ಆ್ಯಕ್ಚುಯಲ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿ ಆಗಿತ್ತು. ಅದನ್ನು ಆ ಆ್ಯಕ್ಚುಯಲ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿಯನ್ನು ರಿಡ್ಯೂಸ್ ಮಾಡಲಿಕ್ಕೆ ITC ಅನ್ನು ಯೂಸ್ ಮಾಡ್ಬೋದು ಅಂತ ಹೇಳಿದರು. ಆ್ಯಕ್ಚುಯಲ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿ 12, ಅದು ITC ಇದ್ದದ್ದು 5. ಸೊ ಅದನ್ನು ರಿಡ್ಯೂಸ್ ಮಾಡಿದಾಗ ಬಂದ ಅಮೌಂಟ್ 7. ಅದನ್ನು ಗೌರ್ಮೆಂಟಿಗೆ ಪೇ ಮಾಡಬೇಕು ಅಂತ ನಾನು ಹಿಂದಿನ ಎಕ್ಸಾಂಪಲಲ್ಲಿ ಹೇಳಿದ್ದೆ. ಸೊ ಸೇಮ್ ಥಿಂಗ್ ಎಕ್ಸ್ಪ್ಲೇನ್ಡ್ ಹಿಯರ್. ಸೊ ITC, you can say ITC is the tax that a business pays on the inward supply that is purchased, and that it can be used to reduce its tax liability when it makes an outward supply. ಯಾವಾಗ ಅವರ ಸೇಲ್ಸನ್ನು ಮಾಡ್ತಾರೆ, ಅಲ್ಲಿರುವ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿಯನ್ನು ರಿಡ್ಯೂಸ್ ಮಾಡಲಿಕ್ಕೆ ಅಥವಾ ಆಫ್ಸೆಟ್ ಮಾಡಲಿಕ್ಕೆ ಪರ್ಚೇಸ್ನ ಮೇಲೆ ಅಥವಾ ಇನ್ವರ್ಡ್ ಸಪ್ಲೈನ ಮೇಲೆ ಎಷ್ಟು ಟ್ಯಾಕ್ಸ್ ಕೊಟ್ಟಿದ್ದಾರೆ ಅದನ್ನು ಯೂಸ್ ಮಾಡ್ಬೋದು. ಅದಕ್ಕೆ ನಾವು ಇನ್ಪುಟ್ ಟ್ಯಾಕ್ಸ್ ಕ್ರೆಡಿಟ್ ಅಥವಾ ITC ಅಂತ ಕರಿತೇವೆ ಅಂತ GSTಯಲ್ಲಿ ಹೇಳ್ತಾರೆ. ಓಕೆ, ಸೊ ದಿಸ್ ಈಸ್ ಆಲ್ ಅಬೌಟ್ input tax credit and how exactly it works. Thank you guys for watching the video. If you like the video, give a thumbs up and subscribe to the channel by clicking subscribe button. If you want to share the video, you can share the video, because you can learn to share and share to learn. If you want to get continuous notification, click the bell icon there. And if you have any comments, doubts, clarification, please write here. Thank you once again. Thank you all.